But let's get to Matt Orton, the Chief Market Strategist at Raymond James Investment. Matt, thank you very much for joining in. The Wall Street action yesterday, a solid rebound after Friday's rout. We managed to claw back 50-60% of Friday's losses. Was the Friday sell-off a weakness? Or, are you getting a sense that markets are now nervous? I mean, what's the call now on Wall Street after the kind of rally that we've seen with the tariff threat still looming?
Hey, good morning, Raymond. It's always great to join. And I think the price action today, or I guess yesterday, was definitely encouraging. What we saw on Friday, I think, was an excuse for the market to sell off and consolidate a little bit. If you can believe it, it was the first day in 34 trading sessions where the S&P 500 had more than a 1% move in either direction. So we've been in a very, very low volatile environment. And there's been a lot of gains for the market in the absence of any sort of economic data or information that could disrupt the rally, and I'll call it the visibility into the strength of the AI trade. So I think Friday was just a reason for some profit taking, and the fact that we were able to see strength through that with respect that we're not going to be in a tit-for-tat trade war again with China is definitely encouraging. So I spent the past week in Europe meeting with clients. The mood, I think, is still fairly pessimistic, or I would say one of reticence, of hesitation with respect to the market being at all-time highs. And I always encourage our clients, like we've talked about in the past, come back to the fundamentals. The corporate earnings picture in the US in particular looks very, very strong. There's a lot of good developments for long-term, durable, secular growth themes, and that's what you want to lean into as an investor. So I think hopefully this market can continue to move higher.
Matt, you like a lot of these consumer tech companies back home in India. I remember in the past you talking about Swiggy, the quick commerce plays largely. You've got another one listing today, LG Electronics, not exactly a platform play, but in the consumer electronics, and valuations are attractive, 30 times forward multiple at issue price. So if we do get a gap up as expected, say 30-40% higher, would you look to buy it, or do you think then it would be a fair value? And tell us some of the recent trades, investments that you've made in India.
Yeah, absolutely. So I have a rule where if I don't get a piece of the IPO action, I do not trade it on the first day. I like to wait to see how things actually settle out. But to your point, Rima, the LG IPO is exciting, and it's exciting for really three key reasons. Number one is just the fact that we're bringing a company that operates in a higher quality consumer part of the market, and it's driven by a strong investor enthusiasm. And I think two is here's a company that's able to play into this premiumization trend. It's one of the key reasons why I've liked Mahindra & Mahindra for such a long time. It's playing into this concept of a burgeoning middle class and the ability to push premium products. And I think thirdly is by employing that type of strategy, you get better margins, and margins lead to better free cash flow and profitability. And so that's what I like across a number of companies. So Swiggy, I can't wait to see what earnings are going to play out. Eternal's been another quick commerce name that I've liked a lot. And so I'm looking forward to hopefully seeing a continued trend with respect to monetization of the investments that these companies have been making. And I think a lot of the data I see from, say, a Paytm is certainly encouraging of just where the Indian consumer is. So we're certainly starting on a good foot with respect to tech. It's not a disaster like it has been in the past. And so I'm hopeful that we can start to see stabilization to earnings in India, which I think will attract the attention of more foreign investors.
All right. Hi, Matt. Good morning. Good to see you, Ben. You've spoken about banking names, ICICI Bank. In the past, you've liked Apple as well, and a couple of other notable ones, I think Mahindra & Mahindra as well as Interglobe. How are you positioned on tech, though? TCS's numbers weren't that bad. I mean, and HCL Tech is obviously a better set of numbers. On tech, how are you positioned right now? Would you gradually start turning constructive, or do you believe there's still too much uncertainty? You'd rather stay away from there?
Yeah, it's a great question, Nigel, and I ask myself that every day. I'd like to see more of the earnings come in. So I'd say what we've seen so far, one data point does not make a trend across the industry. And so I'd like to see more strength with respect to the ability of these companies to drive artificial intelligence revenues. I think that's going to be very, very important. I'd like to see stabilization with respect to their overseas businesses, in particular Infosys. I'd like to see stabilization with respect to their European business and their financial and asset management businesses. That's going to be important. So if we can see earnings not getting worse and better visibility and more upbeat commentary from management teams, I think that would be a signal to me as an investor to say, hey, maybe it makes sense to put a little bit more dollars to work in these companies, and then I can push that position over time if I continue to see momentum build in those names and other good sets of numbers, say at the start of next year in 2026 when we get Q4 data.
Okay. Any other investments, recent purchases in India?
So I haven't done anything else outside of last week when we had a conversation about, adding some more exposure into Swiggy and adding a position in Apple 3i. I think heading into earnings season, I want to be very conscious of the volatility that there could be, and I want to see results. Again, it's okay to be early, but I much prefer to see a strong story play out where I can add, and I have very high quality positions. I've added a little bit back to my position in ICICI Bank. That looks like it's gaining a little bit more momentum. So if we can see financials in particular start to strengthen, I think that'll also be a good signal for India as a whole that it makes sense to maybe rotate some of the dollars I tactically moved into China back into India to re-up my positions.
Matt, always a good conversation. Thank you very much for joining us here on CNBC TV 18.
Thank you.